Pete, welcome back. It's another week. It's another week gone. It's another week to run. Ahead of the week, though, brief me. How did the week close? Where did it land? And what are we facing as we roll into this trading week?
Well, good morning, Will. It's been a very eventful week, and considering what we experienced Thursday and Friday, with that Aussie dollar at 80 cents, smashed through, and I think it was a trader's delight. Since then, and that's the interesting part, since then, which was Thursday evening, our time, we're now down in the 77s, and it's been a washout of 4% to the downside in that brief period.
Well, mate, let me bring that chart up, and we can have we bring it up on screen and talk it through, because it's a pretty significant chart when we think about it. You know, the
huge fall off
from effect just shy of 80 to dropping down to 77 thereabouts. I mean, what's driving that? What's behind it? And what should we be worried about?
Well, I think it was that bond yield story, but also that US dollar has really strengthened quite considerably over that time. We're back nearly at 91 for that US dollar index. We're in the 89s, so that's been a big push up. Gold off. US dollar strength, and we had a huge sell-off as far as 4% for the Japanese market on Friday, which I think terrorised a lot of traders. They were quite scared as far as what's going to happen this week moving forward. So when you take on board that, and I don't use that word lightly, 4% fall for the Nikkei is a monstrous correction for what we experienced Friday evening.
Look, on screen here at the moment, we've got the APAC numbers, and as we know, Japan hasn't opened. We're talking about numbers here as of Friday, so ripping down the list there, you can see that, you know, quite a lot in the red.
Yeah, exactly. It's a very, very solid sell-off. I mean, it's been an enormous ride up, as we all are very conscious of over the last 10 or 11 months. But that Nikkei 225, there it is there, and 1,200 points, a 3.99% washout, but you're up 37% over the last year. So it's been incredible volatility, and that leads us into what are we expecting this week. So let's put a line in the sand as far as last week. Though oil has had a bounce this morning and gold's been very heavily spanked down. What's interesting, I think, Will, is that we've got Reserve Bank meeting in Australia.
Yep.
Very quiet week for central banks this week. So we've got RBA tomorrow in Sydney, first Tuesday of the month. And then on Friday, I'm keeping a very close eye as far as those non-farm payroll numbers for the US.
Okay, so let's just recap that. So as the new month starts, investors have their eyes locked on the latest non-farm payroll numbers out of the US. We've got an accelerating sell-off in bond markets.
Yep.
The Reserve Bank, as you just said, is meeting this week, and it's the only central bank meeting this week. So there's the race that will be run.
I'm not expecting any fireworks. I don't think surprises will be on the table. And the current consideration is those bond yields are really ratcheting up, and it's creating a great degree of uncertainty across the market.
Well, it's certainly making it a little harder for the central bank to do the job, right? I mean, the bond movement perhaps wasn't necessarily planned. They'll be pulling a few different levers today to wind it out. We're seeing surging house prices in Australia. We're seeing a lot of the top stocks that were really running high in terms of valuations.
They're exhausted to the upside,
taking a big beating, and so therefore we're seeing perhaps it's a counterpoint.
Well, it possibly is, and I think as we say goodbye to first off summer across the southern hemisphere, though it really is it's a very unique day today, the 1st of March, because for the people that were born on the 29th of February, they experience 3 years of every 4. The 1st of March is their birthday. So we say a special happy birthday to those people. And this is now the start of that 3rd month of the year, start of our autumn in the Southern Hemisphere, and that could be a turning point for the markets. So let's just see how momentum builds and all of those uncertainties leading into trader opportunities over this coming month.
Well, let's recap that for a moment. So around the world, what did we see over the week? We saw Biden, Merkel, Trudeau, and Mr. Johnson all get together and celebrate the Paris Club and the unity coming back around.
Sure.
What is sustainability, the environment. Great. Yep. We see rare earths and critical minerals going nuts in an east versus west situation.
Yes.
Great. We see the resources plays, really around energy. We're talking about the demand issue, or the, if you like, that core principle of economics. That need piece. I need my shelter. I need my fuel. I need my food.
Maslow's theory.
There we are. And we're sitting here going, okay, cool. What's coming next? So, we've got some big plays. There's some big energy out there, and I think if we have a look at it, you referenced oil a few minutes ago.
Absolutely.
Big driver of activity. They're talking about 500,000 barrels that may come online.
Yep.
What then?
Well, OPEC, we are awash with oil. We're worrying about, I think from a trader's mindset, what's happening with the issues with Syria, the US firing missiles and all of those geopolitical concerns. Could they upset the market? And there you look at, which is a very solid commodity-based currency, the Canadian dollar versus crude oil. Crude's had an enormous uptick. It's been just one-way traffic over the last, really from the end of October. November, December, January, February were outstanding to be a day trader for crude. It's just one-way traffic. So the dollars have been earned. Now's the time to reflect on it and see where the next matter of weeks take us. Because I don't think you can be a trader these days, Will, that just marries a position and just says, right, we're long, we're short. No, you've got to be very conscious. All of your fundamentals, your technical analysis, your seasonality plays, weather outages and all of that drive into how you make that decision.
Speaking of weather outages, Texas. I mean, we saw the big weather outage in Texas. Macquarie Bank picks up the tab and banks the return.
You know, I could go, now's not the time to draw on the weather outages or the reason of being, how it manifested, but it really shows the vulnerability of any state or any locale, that how weather can just completely and utterly destroy an economy.
Changes the perspective very quickly.
Certainly does. The windmills didn't work too well.
Well, no, that's true, but then again, neither did the dikes in Holland. But that's another story. Now, mate, Canadian dollar versus crude, we've talked a bit about this. Any other drivers there for oil that you're thinking that that's going to come into play?
Well, Friday, which was Saturday morning here, we saw a sell-off as far as crude. It's bounced this morning. It's probably a little bit of profit taking. So the market's back on. I think it's going to be a volatile week for crude, and that again is
once again a good day traders program.
You know, you just can't fault it.
All right,
great time.
Rolling forward to US, and we've got non-farm payrolls out. Charts up on screen at the moment. Brief me. What does it say?
Well, we're hopefully going to see a return as far as stronger growth than what we experienced in January. So it's a better number for February. Friday will be the drop dead date for that one. And the unemployment percentage still around that 6.5%, 6.4% for the US. So we want to see, you can't keep on building with the great job returns and the job numbers that we experienced in June, July, August, September, October last year. But now it seems to be flatlining a little bit, and it's whether the current Biden administration is going to see a return of jobs or whether it's going to see a dampener, and only time will tell.
Time will tell. But the early suggestions suggest that he's racing away trying to create some jobs, and as we say, we'll see if we can get them through.
Sure.
Eurozone inflation on the rise. So brief me, Pete, what's happening here?
Well, I think that's across very much, certainly the Eurozone, and the other side, of course, higher energy prices, base metal prices, and all of the inputs that go into that super cycle for commodities that we're part and parcel of our daily existence. We all need fuel. You drive to work. I come in, drive to work. You've got higher costs as far as input costs for base metals. We've seen the likes of the BHPs had big rallies to the upside. So all of that goes into the melting pot as far as inflationary fears. Those bond yields that we saw creep up, or not creep up, but rocket up. So I think that it creates, again, uncertainty. What do central banks do? And are we going to be drawn up the curve as far as higher rates sooner than later?
Well, it's interesting to see it back on the slate. You know, it lost a little bit of relevance, didn't it, through the pandemic,
through 2020, absolutely.
And so it's nice to see that inflation data is slowly taking precedence, perhaps is part of the conversation around this recovery phase.
You bet.
Mate, look, talking about the pound here, this is tracking pretty well. You know, they've scaled this. We're talking $1.40 on. The vaccine's sort of rolling out.
Yep.
The UK budget's coming through.
It's been an enormous trade, Will. You know, I put my mind back to the end of September, early October. We were at 127s, 128s. When we've hit that through that 140, it's come off a little bit in the last
140. It's the first time in 3 years.
Yeah, it's a huge move to the upside, and the other side. The traders delight. Our traders, we call it the cable. The cable trade as far as British pound versus US dollar has been one-way traffic. If you look at that, you look at crude and you look at the equities, you really didn't have to trade anything else over the last 4 months, and you would have been banking huge profits, and it's just a time to rejoice. So let's see where the next month goes, but our traders need to be congratulated, the ones that took the opportunity. The last 4 months have been outstanding.
All right, just reminding you, on Wednesday, the 2021 budget's coming out. The UK Chancellor of the Exchequer, Mr. Rishi Sunak, will actually be releasing data.
Yep.
So that's another one to watch.
Absolutely, and again, the general state of the economy, the vaccine rollout, the retail sales, the unemployment numbers, all of that goes into the melting pot to create news, and that data will seep through to the markets and we'll get a clear indication of what's going on.
All right, bringing it closer to home, out of here, Sydney, Australia, down in New Zealand at the moment. We're looking at a 4-hour chart. It's the New Zealand dollar versus the US dollar, and there just seems to be a sell-off, mate.
Yeah, absolutely. It got whacked down. So there we are. That's
whacked with a big stick.
Whacked with a big stick. It had a huge run-up, and there it was, whacked down. I'm sure that the rest of the day you could see a consolidation, a little bit of profit taking.
But we're talking about a plunge here from 3.5-year highs.
Yep.
Okay, cool. So how far does it go and when does it pop?
It's profit taking. That US dollar has hit everyone by a little bit of surprise. It was at the 89.7, 89.8 on Friday or Thursday night, and now it's back at nearly 91. So there could be a consolidation, the bond yield story, US dollar strengthening, all of that needs to be considered. And these smaller economies like Australia, New Zealand, and roll probably Canada in there, really are at the expense of that strengthening US dollar.
All right, Pete. Well, let's round up. Any final words for traders this week ahead of another week that is?
Hold on to your hat. I think it could be a very interesting one. Keep an eye on gold, and there may be some very good opportunities across that Asia section or Asia sector as the days roll on.
Pete, thanks for speaking with us today.
All the best, Will. Cheers.